Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now markets are still experiencing a short-term pullback ahead of the next FOMC meeting, also known as a Fed meeting, which is happening tomorrow. And at that next Fed meeting, there will be another increase in interest rates, which will affect markets. So that will be important to pay attention to. And in just a moment, I'll be talking about the exact probabilities for what we can expect at that next Fed meeting. And I'll be talking about what would be considered bullish or bearish. So all of that and more later in the video. Definitely stick around. First of all, just giving you a quick update on the US stock market. This right here is the NASDAQ 100 index on the daily time frame. And so far today, we've seen the stock market open up above yesterday's daily candle close. Although throughout the trading day so far, at least at the time of recording this video, the stock market has sold off back towards yesterday's daily candle close. But right now, the NASDAQ 100 index is still currently holding above this important range of support, which is coming into play in between around 11,000 and 11.2k. And so for the bulls out there, it is important for the NASDAQ 100 index to hold above that support range in order to continue this bullish relief that we're currently in, that is also within a larger downtrend as of recording this video. And for the bears out there, 11,000 is the level to break for the NASDAQ 100 index in order to potentially signal the next leg lower. But until then, as of right now, we're still in this somewhat shorter term bullish relief within the larger bearish trend as of right now. But anyway, just before getting into the crypto part of this video, first quickly going over the next Fed meeting, which is set to happen tomorrow. And this chart right here, by the way, shows the US federal funds rate, which is basically the rate that dictates other interest rates around the financial system. And so if the US federal funds rate increases, we're likely going to see increases across many other interest rates in the financial system. And this usually doesn't only apply for the US, it also applies for other central banks, because basically if other central banks do not follow the US Federal Reserve in increasing interest rates, then it's the foreign exchange rates of the local fiat currencies that take a hit. And now, in case you're new to all of this, basically when interest rates rise, that is bearish for markets and bearish for the economy because it slows down economic growth. But on the flip side, when we see a drop in interest rates, that basically incentivizes borrowing, which stimulates the economy and boosts economic growth. And in case you haven't been paying attention so far this year, the reason why central banks are raising interest rates is to try and fight inflation. And so if inflation remains elevated as it is right now, that basically forces the Federal Reserve and other central banks to raise interest rates. And once again, basically if interest rates go higher, generally speaking, that is bad for markets. And if interest rates drop back down, generally speaking, that is good for markets. And typically we see changes in this federal funds rate, either rate hikes or rate cuts, at the Federal Open Market Committee meetings, the FOMC meetings, also known as Fed meetings. And once again, as I mentioned in the intro of this video, there's another Fed meeting happening tomorrow where we're going to see another increase in interest rates. And as of right now, the current target range for the federal funds rate is sitting at 3% to 3.25%. But for the purpose of simplifying this video, I'm just going to look at the larger figure, the 3.25% number, because as you can see, that's what's currently shown in this chart right here. And so now looking at the exact probabilities for tomorrow's Fed meeting based on what the futures market has currently priced in. And what we can see here is, first of all, the current federal funds rate once again is sitting at 3.25% or 325 basis points. And just looking at the larger number for these two potential outcomes at tomorrow's Fed meeting, there is currently a 13.8% chance of the federal funds rate rising from 3.25% to 3.75% or 375 basis points, which would suggest a 50 basis point hike. And there's currently an 86.2% chance of the federal funds rate rising to 4% or 400 basis points, which would suggest a 75 basis point hike as the most likely outcome. An 96% probability once again. And as I said earlier, these probabilities are currently priced into the futures market right now. And so when you're considering the fact that the market is currently pricing in a small chance of a 50 basis point hike and a very high chance of a 75 basis point hike, clearly it would be the 50 basis point hike which would be the greater shock to markets, and the 75 basis point hike might not be that much of a shock considering the majority of the market is already pricing it in. And once again, as I explained in more detail just earlier in this video, higher interest rates are generally more bearish for markets and lower interest rates are generally more bullish for markets, which means if we get the lower of these two options, so only the 50 basis point hike, that would be considered the bullish scenario, and if we get the 75 basis point hike, that would be considered the bearish scenario, because obviously in that case, interest rates would be going higher than what interest rates would be going if we only see a 50 basis point hike. And now, because the majority of the futures market once again has already priced in a 75 basis point hike, if we do end up seeing a 75 basis point hike, yes, that would be the bearish out of the two options, but we might not necessarily see a lot of bearish price action because once again, the majority of the market is already expecting that outcome ahead of that Fed meeting. And so it would only be this small portion of the market that is currently expecting a 50 basis point hike that would have to readjust to the 75 basis point hike, which once again is only a smaller portion of the market. But on the flip side, if we do end up seeing only a 50 basis point hike at tomorrow's Fed meeting, that would be very bullish for markets because once again, the majority of the futures market has already priced in a 75 basis point hike, which means a very large portion of the market would have to readjust to that 50 basis point hike if that is the outcome. So just to quickly summarize, a 75 basis point hike will likely be slightly bearish for markets, meaning that we could see a slight pullback across markets if that happens at tomorrow's Fed meeting. But if we end up seeing only a 50 basis point hike, that would likely be very bullish for markets. So we'd likely see quite a decent move to the upside across the stock market and the crypto market if we only see a 50 basis point hike tomorrow. And in case you're wondering about future Fed meetings beyond the Fed meeting that's happening tomorrow, we have another Fed meeting happening in December where around half of the futures market is expecting a 50 basis point hike and around half of the futures market is expecting a 75 basis point hike. And then the next Fed meeting after the December Fed meeting happened in February next year. And as of right now, the majority in the futures market is currently pricing in for another 50 basis point hike happening in that February Fed meeting, which would take the Fed funds rate up towards 5%. And then the next Fed meeting after that is in March next year. And for that March Fed meeting, the majority in the futures market is currently split between either keeping the Fed funds rate the same or seeing a 25 basis point hike in that Fed meeting. And based on what the futures market is currently pricing in, it's very likely that the March Fed meeting next year will be the meeting where the federal funds rate reaches its peak, and we could potentially begin to see rate cuts later next year. But anyway, now getting into the Bitcoin part of this video, this right here is the daily Bitcoin to US dollar chart, and right now the price of Bitcoin is still currently experiencing this slight short-term cool-off on the daily time frame. And obviously, if you've been watching my videos over the last few days, you would have seen this short-term cool-off coming before it even happened, because over the last few days in the daily Bitcoin price oscillators, we've begun to see reduced bullish momentum in these indicators, which once again is pointing towards a bit of a short-term cool-off relative to the daily time frame because we're losing some bullish momentum at the moment. And considering these indicators haven't really changed over the last few days, we're likely going to continue to see this short-term cool-off up until the next Fed meeting, which could end up being the next significant catalyst for the next significant move in the price of Bitcoin, depending on the outcome for the next Fed meeting, once again, as I explained earlier. But anyway, zooming into the 4-hour Bitcoin chart, and right now the price of Bitcoin, once again, is still lacking bullish momentum, especially after we're seeing strong resistance at around 20.9k to 21k, as I've also been talking about for a while now on this channel. But as for support in the short term, we still have some short-term support at around 20.3k, around 19.7 to 19.8k, around 19.1k, and around 18.7k are the important support support levels that I'm currently paying attention to for the price of Bitcoin. And as for resistance, once again, we still have strong resistance at around 21,000 approximately. But if the price of Bitcoin confirms a break above 21k, then the next resistance to the upside that I'll be watching is sitting at around 21.7k, and anything above that, then I'll be looking closer towards around 22.7k based on the local high. And like I said yesterday, if you're looking at the price action alone, technically this is still a short-term bullish trend forming higher lows and higher highs. But as of right now, this short-term bullish trend is losing bullish momentum, as we can definitely see in the 4-hour Bitcoin price oscillators. For example, if you're looking at the 4-hour Bitcoin MACD, right now this is showing more bearish momentum than bullish momentum. And if you're looking at the 4-hour Bitcoin RSI, as of right now, we still have this bearish divergence which is playing out, but technically speaking, because this is a bearish divergence that is visible only on the 4-hour time frame, this bearish divergence has basically already played out, because typically when we see a pattern like this on the 4-hour time frame, it plays out over around 1 to 2 days before it fades away. Although, even though that might be the case, we are still seeing the 4-hour Bitcoin RSI in a downtrend at the moment, forming lower highs and lower lows. And so while that is the case, technically speaking, that is still a bearish signal on the chart as of right now. And now the only bullish thing that you could really say about the 4-hour Bitcoin RSI as of right now is that it could be forming a falling wedge pattern, which is technically a bullish pattern. But even with this pattern, we would still need to see a confirmed break above the line of resistance in the 4-hour Bitcoin RSI in order to confirm more bullish price action. And as of right now, in the 4-hour Bitcoin RSI, this line of resistance is sitting at roughly around 53, and the RSI itself is sitting at around 46 to 47. And so at least for now, just in the short term, we're still lacking bullish momentum. So I'd still mostly be expecting either choppy sideways price action or a slight pullback in the price of Bitcoin over the next 1 day up until the next Fed meeting, which once again is where we could experience the next volatile move depending on the outcome. But anyway, getting into the Ethereum part of this video, this right here is the daily Ethereum to US dollar chart. And right now, the price of ETH is still experiencing this short-term cool-off, as I've been talking about over the last few days once again, because recently the daily Ethereum RSI briefly entered into overbought territories, telling us that we're due to see a bit of a cool-off. And we've seen something similar in the daily Ethereum MACD, with the MACD slowly losing some bullish momentum as of right now. But this is certainly not the first time we've seen these signals show up on the daily Ethereum chart. For example, we've seen almost the exact same signals show up back here during around the middle of July. And back then, when we were seeing these same sort of signals, that happened just after we saw a breakout in the price of ETH above significant resistance. And just after that breakout, we simply saw too much bullish price action all in one go. We became a little bit too overheated as the RSI got towards overbought territories, telling us that we're due to see a short-term cool-off. And in that case, the cool-off lasted for around 1 week before we continued higher later on. And so, like I've been saying over the last few days, that's potentially the situation we're in at the moment. We're basically in that short-term cool-off, but still within the overall breakout as of right now, kind of similar to back then during around the middle of July. But if you zoom into the smaller timeframes, these short-term cool-offs on the daily chart become more enlarged on the smaller timeframes, like this 4-hour chart, for example, and they begin to look like possible short-term downtrends. And once again, like I said in my last video, this is what we could continue to see moving forward just in the short term, because right now the 4-hour Ethereum price oscillators are currently looking more bearish than bullish, even though we're still technically within a bullish trend. So just in the short term, this bullish trend is losing bullish momentum. And as of right now, these short-term support and resistance levels have not changed since my last video, and the same can be said about the 4-hour Ethereum price oscillators. For example, this RSI and this bearish divergence. I spoke more about all of this in my last video on the channel, so if you missed that video, definitely check it out. And if you want to know how to make a lot of money in crypto, whether the price is going up, down, or chopping around sideways, then make sure to check out these videos popping up right here on your screen. The video in the top left of your screen shows you how to make money in an uptrend or a downtrend, and the video in the bottom left of your screen shows you how to make money when the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.